Hello everyone, George DeSantis here with the Look at the Market for the week ending March 24th, 2017. We need to read the disclaimer before we begin to look at charts. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. I am not an investment advisor. So let's begin by looking at some charts. The first chart I'd like to share with you here is a chart of the S&P on a regression channel. I think we should note, for example, that whenever the S&P gets to this 90% line, it tends to pull back. It pulled all the way back below the 10% line, and then we rallied up to the 90% line. We got there, we went sideways until it hit the 10% line, and we rallied again, and now it's sitting close to the 10% line. In fact, currently it's at 6%. So the market, in this sense, you might say, well, the S&P is oversold. So we'll take a look at some other charts to see what we can learn from those insofar as the nature of the market right now. Is it oversold really? Do we expect this market to go any higher, or are we going to regress all the way back down to 2300 as many people are suggesting? So let's take a look at the monthly chart of the S&P. And here's the monthly chart of the S&P 500. I think we can see that the monthly chart is still trending up on it's a nice bullish chart. We note that it closed pretty close to the low for the month because the market has regressed a bit. We've had some regression to the mean, so to speak. And notice that I also put the 9 EMA on this chart recently. So we look to see if this Kalman filter, the 4-period simple moving average, crosses below the 9-period exponential moving average, as it did over here, to see if we really get a turnaround in this market. So as far as I'm concerned, as long as this remains intact, this 4-period above the 9, I think we're pretty safe territory in saying that it's still a very bullish market long term. Now the MACD histogram is still trending up, and at the bottom of the chart, Elder Force it pulled back a bit with the recent regression, but it's still very bullish, way above the zero line. Let's take a look at a weekly chart. So let's look at this weekly chart of the S&P 500. The first thing to note is that the Kalman filter, this yellow line, is still above the instantaneous trend line, way above it. It's pretty close to hitting the parabolic. So it's pretty close to signaling a downtrend as far as parabolic is concerned, the yellow dot, right? Interestingly enough, it closed just above the 9 EMA. This is a 9 exponential moving average in blue, in dark blue. But we have a pretty bearish bar right here. So this trend, this move can go even lower. And there are those who are looking at, and I am looking at the 2300 level now as a next support level. Interestingly enough, since I put the Fibonacci regression numbers here, lines rather, and we can see that getting back to 2300 would be pretty close to the 38.2 Fibonacci retracement. So all of this lines up very neatly to say, well, maybe we go further, maybe we go down to 2300. That'll bring us pretty close to the instantaneous trend line. Perhaps then we'll find support of the instantaneous trend line, as we've done in the past here and here. So we'll see how this plays out. But if I'm looking at the 38.2 Fibonacci retracement level, 2300, if we're going to come back any further to 20, and if we're going to regress any further. Now, in the middle of the chart, MACD is still trending down a bit for the last few weeks, but the fast average hasn't crossed over the slow average. And in that case, of course, the MACD is still above zero, because when there's a crossing, MACD histogram goes below zero. That's what that measures. On this chart, we have the CCI index, the Commodity Channel Index, or CCI. It just recently crossed back again, just briefly below the 100% level. So we'll see. This is still bullish because as long as CCI is above zero, this line here, it's in an uptrend. So this is identifying the uptrend here too. And also RSI 12 on a weekly chart bumped off of the 50% line here, 40% line here, and since then it's been signaling an uptrend. So while we are in the process of a regression back to the mean, if you wish, the trend is still intact, it seems. And we need to see now how far down this regression will occur. Will it go back to 23? Will it come back down to 23, which would be close to these levels here, the instantaneous trend line, the 38.2 Fibonacci retracement. So this area here is what we have to take a look at. Okay, let's take a look at the daily chart. Oh, here's a daily chart of the S&P 500. The first thing I think we should note here is that the Kalman filter, when we are in an uptrend, remains above the instantaneous trend line. The yellow line is a Kalman filter. This is the instantaneous, a light blue line. Well, it just crossed, the Kalman filter just crossed below the instantaneous trend line. Likewise, the 9 EMA, 9 exponential moving average, the dark blue line crossed below the instantaneous trend line. So we are in the midst of a downtrend. And why do we say that? Well, not only because these trend lines have now crossed, but we have parabolic above the most recent bars, the last 3 bars. So on this daily chart, we are in a downtrend. We should also note that we are struggling. It seems the S&P is struggling to hold at this level here, because for 3 days it remained just about at the 2350 level. So we'll see if that could continue to do so, or perhaps we'll find support here and continue the uptrend that has been in place for a while. This is the sine wave. The sine wave is indicating that we're in a downtrend. MACD has trended down below the zero line for some time now, and even though there is no divergence, it's in the bearish territory below the zero line. So the daily chart is the bearish looking chart, but looking as though we might find support at 2350, and if we don't, look for 2300. Okay, next we look at the weekly chart of the Nasdaq. This is the weekly chart of the Nasdaq, and of course it looks very much like the S&P because they pretty much move in tandem with each other, with some variations, of course. But what we can see here is that the low of last week's bar of the Nasdaq just seemed to hit the 9 EMA, and it's just above the parabolic yellow dot. So there's no signal to reverse the uptrend of the weekly chart at this time. But this could change very rapidly next week. So we have to keep an eye on it. The other thing to note is that the Kalman filter is way above the instantaneous trend line. And that indicates the trend is still very much in place, this uptrend. Now, the Bollinger Bands, 2 standard deviations, the Bollinger Bands that are 2 standard deviations away from the mean price, seem to be going into a squeeze here. So if that's the case, we should expect in the very near future a more dramatic move, a more significant move, but we don't know the direction of the move. It could be up, it could be down. However, since we have such a strong trend line, a trend on the weekly charts of both the Nasdaq and the S&P, there's every reason to believe that we could go higher from here. So we'll see how that works out. Now, the RSI 12, that good measure of a trend on the weekly chart, is still in pretty bullish territory, way above the 60% line. And MACD, although it's trending down a bit, as we saw in the S&P as well, there is no divergence. So on the weekly charts, we still have a strong uptrend with a bit of a consolidation period perhaps, or even more than that, perhaps some more of a downtrend. But we'll see how that develops as the week plays out next week. Let's look at the daily chart. On this daily chart of the NASDAQ composite, excuse me, uh, what we should note is the same situation as we found on the S&P. These trend lines and the 4-period exponential moving average. Actually, this is the instantaneous trend line, sorry. And in the 9 EMA, 9 exponential moving average, cross below the instantaneous trend line. So we now have a downtrend. We see parabolic yellow dots above here as we did on the S&P. And what we find is that even though we had this big red bearish bar last week, since then the market has been regaining some of this loss. So that's encouraging. At the middle of the chart here, we see that Jerry Appel's sum of the rate of change indicator gave us a big sell signal here. So we've been whipsawed in this area here. Buy, sell, etc. MACD, although it dropped below the zero line, seemed to have ticked up a little bit at the end of the week on Friday. So we'll see how that works out. Maybe we'll find some more up action on the upside. And Elder Force, I discussed this with you about what Alex identified in his recent webinar. Elder Force, the 13-day period of Elder Force, spiked down. This is what Alex and his group calls, his spike group calls a spike down. When you have a spike down basically in an uptrend, because this has been an uptrend for a while, this is usually a buy signal. We'll see how that works out, as I mentioned in an earlier email. So we have a spike down here, and of course, yes, the price market moved up a little bit since then. But we want to see if we get any follow through on this. We don't know yet. Let's take a look at something else. Here's a chart, the daily chart of the S&P, showing us the VIX, the volatility index. Well, according to Larry McMillan, who writes the book on options, he says, look, pay attention to the VIX. So if it crosses above 13 and a half, be more cautious, and especially if it crosses above 15, be aware that this trend might be over, this uptrend we've been in since November. So we'll pay attention to that. But as of now, it's still at 12 and a fraction, almost 13, I guess. Here's the stock chart showing us the impulse bars, red, green, and blue. And for the S&P 500, we can see the most recent bar is blue on the extreme right. So it's quite possible we're going to go between this green line and red line, which will be the buy zone, and that'll take us back to about 2300 if we get there. And if we get there, it's a buy zone. You can see over here, whenever we pull back between the red and green line, you know, between the 9 and the 30 was a good buying opportunity. Look at how many times that occurs until it broke down here, of course. So let's take a look at something else. And here's a chart of the McClellan oscillator, and we can see that it's still trending up. So that's a good sign. We're running short on time here, so I want to see if there's anything else I should show you. So let's take a look at something else if we can. And a quick look at one last chart, which is the percentage of stocks above their 200-day moving average of the S&P 100. And we can see that it's still at a pretty high level at 85%. So that'll be all for this week. I think we could sum it up by saying that the monthly charts are still very bullish. The weekly chart is bullish, very bullish. And so as long as we can hold above 1350 or so, 2350 on the S&P, we should be in pretty good shape. But we got to keep our eyes open and protect ourselves to the downside if we can. Have a nice weekend.